Hi everyone, I'm Afshana Afrin, and ACCA affiliate and FR mentor at BeingACCA. So today we will be having a proper debrief on FR Pre-December 2025 mock exam, section C, which is a consolidation question. You have to prepare a proper full-fledged consolidated statement of financial position and a ratio analysis question. Right. So let's start with the question number 31 without any further delay. So it says that Panama Co. operates in a manufacturing industry sector and on 1st March 2007. Right. Now let's quickly check what's the year end. It's 30 January 2007. Right. So year end is 30 June 2007 and acquisition took place on 1st March, right? So how many months into the year? So July, August, September, October, November, December, Jan, Feb, right? So 7 months into the year acquisition took place. So March, April, May, June, right? And we have to consolidate 4 months, right? Consolidate 4 months, which is March, April, May, June, right? Now P is the parent, Panama Co. And we have this, and they have acquired a supplier for a 75%, say 75% of Trilby Co. Right? This is a subsidiary, right? In exchange of cash. So it's a cash consideration, right, for 200,000. And there's a share for share exchange also. Right. So these will be very useful in calculating the goodwill of the company. Right. And they have given us the statement of financial position, which we have to, add both the sides and then make the consolidated statement. Right. And then they have given us some adjustments also. Panama Co has recorded its investment in the company at the amount of cash consideration and has made no entries for the share consideration, right? Which means they have already made adjustment for the cash consideration while the share for share exchange is pending, right? Market value of both the companies are given and market value for the companies which is $10 and 5.9. Nominal value is 1. And then Panama has elected to measure NCI as a proportion of net assets. So, by now you guys must know this. And there are two ways of measuring NCI, either through fair value method and other is proportionate method. Right. In proportionate method, what happens is that the net assets of the subsidiary at the acquisition date is used to find out the value of the NCI, and any impairment, if any, will be charged completely to parent retained earnings and none to NCI. So this is all about the two methods of how NCI is valued in a consolidation scenario, right? And on 1st March 2007, which means at the acquisition date, there was a property which had a excess of fair value of 36,000, right? And there's also remaining useful life given, so we can calculate depreciation and we can adjust the fair value also, right? And then in the fourth adjustment, it says that the company had made a profit of 33,000. This will be needed for calculating the net assets of subsidiary at the date of acquisition. And this was lower than in previous year. Okay. Like a parent company was aware that the subsidiary was struggling to control cost. Right. They have a struggle. So the subsidiary company was struggling to control the cost prior to acquisition, and they already had a restructuring plan. Right. They had a plan to do restructuring. Now, a provision can be made if the plan has been communicated to those who are affected. Right. So the cost was $60,000, and this was announced to the staff members. So now there is an obligation. However, this obligation was on 20 March 2007. Okay. And the restructuring will commence in July 2007, which is after the year end of Panama Co, and will be completed by December 2007. Okay, so these are the important dates which you're supposed to remember. The intended restructuring costs are not reflected in either of the company's financial statements, right? Okay. And throughout the year ended, the parent company has purchased goods from Trilby per month, and then they have given us all the information required to calculate unrealized profit. So all the unrealized profit will be eliminated from the consolidated statement of financial position, because this is an intra-group transaction which has to be eliminated to avoid double counting, right? And then the parent company has acquired investment property on 1st January. Property cost was 144,000. Useful life is given. And then, okay, they had a change of transfer of use, right? They adopted fair value model for investment property and has been advised that the fair value of the property is 170,000. Other than recognizing the property at cost, no entries have been made. Now, since, sorry, right, there's no change in use. However, they have decided that they will value the investment property based on fair value concept, and that the fair value of the company of the investment property has increased. So, as per the standard, any gain or loss will go to statement of profit and loss account, right? If fair value method is used. So let's look at the solution for this. This is a proper 20 mark. Prepare the consolidated statement of financial position of Panama Co. Right. So let's look at the answer. Okay, this is the answer, solution 31. Now, this is the official answer by ACCA, and let's look at the working notes first. Right, so we have goodwill, cash consideration, which was directly given to us, 200,000, then share for share exchange. Right, now over here, the subsidiary uh, mm, had share capital of 80,000, right? So 80,000, which is the share capital of the subsidiary, into 1 divided by 4, because I was a share for share exchange ratio, into 75 percentage because that's the parent share, and $10, which is the market value or the share price of the parent's share, right? So when solving this we get 1,50,000. I mean, which is 150 million, right? And then NCI is valued based on the net assets of the subsidiary. So we need to calculate this 476 value, right? So this working note is made. Fair value of net assets and acquisition, share capital, which is given in the question, retained earnings, which is also given, and then you're supposed to subtract the profits since acquisition, because acquisition has taken, like, because they have given us the retained earnings at the reporting date. So if you subtract the prior year, which is like prior months before acquisition, the 4 months, you will get the retained earnings at the date of the acquisition, right? So 33,000 was the profit for the entire year, into 4 divided by 12, because it's been 4 months into the year when the acquisition took place. Then fair value adjustment is happening over here, 36 million, right? It was, how much was it? Was it 36 million? Yeah, it was 36,000 in excess of that one. And then depreciation will also be considered over here, right? So calculating everything, you get a bargain purchase of 7 million, which says that the net assets were more. Right, and the parent company has paid less consideration and has got more net assets of the subsidiary, right? So in bargain purchase, all the gain goes to the company, like the group retained earnings, right? And this also goes as a gain to a profit and loss account, right? So next is a paragraph about the restructuring cost. It's not an obligation for subsidiary at acquisition. and it's not included in net assets. However, since they are announced, they should become a present obligation to the subsidiary and should be recognized as a provision. That's what I was explaining. That if the plan has been announced to the people who are affected by it, then it does become a present obligation, and then the company should recognize a provision. Right. Now let's check working note number 2. It is a share for share exchange working. Again, 80,000 was the share capital. Divide by 4 because one share for each 4 shares in the subsidiary. 75 percentage because it's the parent's holding. You get 15,000 new shares were issued at $10. Now, since the fair value or the nominal value of the shares were 1, right? The rest 9 is a share premium, right? So share capital is basically 15,000 shares into $1. You get 15,000, which you credit to share capital, and 15,000 shares into $9 will be the share premium. So 1,35,000 will be credited to the share premium, right? So this is the adjustment for share capital and share premium. Right? And then there's also addition depreciation on the property since the fair value, right? The 36 million fair value was excess. So divide by 20 into 4 by 12 because it's post acquisition, right? And you get 0.6 million figure, which is to be distributed in the respective ratios to the parent and to the NCI, right? Retained earnings 75 percentage, 0.75, and NCI gets 25 percentage of it, which is 0.15. Now, why is this happening? This is happening because this was something which was in the books of subsidiary, right? Now, if subsidiary is an action, anything which affects the subsidiary will affect the NCI also, right? So it has to be properly distributed between the parent company and the NCI, right? And we have the unrealized profit. It said that um, where's this point? Yes. So for the year ended 30 June, the company has purchased 8,000 worth goods from the subsidiary per month, right? So 8,000 into 12 is 96,000, right? So the full year. And since we need only for 4 months, sorry, 8,000 into 4, right? Okay, so it's 8,000 per month into 4 months because that's post-acquisition sales, right? Now it's given that there's a markup of 25 percentage markups and costs, right? So this is basically our sales SCP. This is markup, right? This 100 percentage. What's the markup? 125 percentage. So our solution is basically um this, right? 25 percentage will be the profit. The sales figure is this much. Cost will be nothing but this divide by 125 into 100 percentage. Then when you subtract both of them, you get the profit of 6,400. Right. It says that the company has, okay, company held the goods that the subsidiary has sold to parent for 2 months only. See, it's May and June only. So it's only for 2 months, 8,000 into 2, right? So the sales were 16,000, and out of which you have, see, the total sales made by this is more, but it says that the parent company has only May and June stock left in the inventory, right? So 8,000 into 2, which is 16,000. 16,000 is the leftover inventory. So for this, when we find the unrealized profit, it is nothing but 32,000, right? So this 32,000 should be split between both the parent and the NCI because it was sold by the subsidiary, right? So we have 16,000 into 25 percentage divided by 125 percentage, 3.2 million, right? And then this will be split between the retained earnings and the NCI. Then coming to non-controlling asset, the acquisition amount we found from NCI, from the working note number 1, which was this 25 percentage of the fair value of net assets of subsidiary, 119. So in NCI working note, we will bring that 119 down. Then share of profit since acquisition, which is again the profit which was 11,000, right? Right. Profits how much? Since acquisition, 33,000 plus into 4 into 12. So that's the profit since acquisition into 25 percentage because that's the NCI share. Then depreciation will also be considered. So minus 0.15. Unrealized profit will also be considered. So minus 0.8. And then the share of the restructuring provision will also be considered, which is like 60,000, which was the entire cost into 25 percentage because that's the NCI share. Right, and there's an obligation existing, so a provision is to be made. So coming to the retained earnings, it says that the earnings of the parent company is taken. With that, the profits of the subsidiary since acquisition is added into 75 percentage. Then share of additional depreciation, unrealized profit is adjusted, and again there's an increase in the value of the investment property, right? So that amount will be added to retained earnings because it increases the profit for the company, right? So 26 million is added over here, and provision for restructuring is also subtracted. 75 percentage is the share of the parent, so minus 45. And again, as I mentioned, that the goodwill is negative, which means that there's a bargain on the purchase. So this will be added to the retained earnings. So 7 is added over here. So finally, a retained earnings is 511.4 million, right? Like this, just like this, the consolidated statement is made. Property, plant, equipment. We add both the figures. Then we add the fair value, which was in excess. So 36 million minus the depreciation on this 36 million, right? Investment property, there has been an upward revaluation. So we add that and make sure it's 170 million at the end. Right. Now we have inventory, which is 63, which is the parent plus the subsidiary minus 3.2 because this is the unrealized profit. Right. And then receivables also you're supposed to minus 8 because right, you're supposed to minus 8, and we have cash, which is the same. Then the share capital plus 15 because this is the shares that has been issued. Share premium also because the shares were issued at a premium of $9 per share. Retained earnings which we found out from the working NCI, we did working for this. Non-controlling liability, you simply add the parent plus the subsidiary. And then in current liabilities, you're supposed to add the parent current liabilities plus the subsidiary plus 60. Now, why 60? Because in this, there has been uh, um, because there is a provision, right? The restructuring provision, you're supposed to add this because this will increase the current liabilities, right? And then you again minus 8, right? And then, so you get the total equity and liabilities. This is this, and this is this. Therefore, our statement of consolidated statement of financial position has been matched, right? Okay. So let's move on to the very next question. You can see the marking guide over here. There's 1 mark for all the major ones. There's 2 mark for current liabilities because there's provision concept, right? For gain calculation of purchase gain, which is the goodwill calculation, there's 3 marks. Okay. Okay, so let's start with question number 32. Okay, so let's start with the next question, which is about ratio analysis, right? Yeah. So over here it says that it's a clothes manufacturing company, right? And we're supposed to calculate the ratios for those listed for the company, and year end is 31st December 2006. This for 4 marks. Since this is for 4 marks, you're supposed to calculate approx 8 ratios, right? Because 0 0.5 marks per ratio calculated. Okay, and next requirement is analyze and comment on the financial position, performance and position of the company for the year ended 31st December 2006. So this is very straightforward question, a typical question, right? So this is for 16 marks. So for A, it's for 4 marks. So make sure you have done 8 ratio calculations, right? 0.5 marks per ratio. And for B, there's 16 marks, right? So make sure you use proper subheadings. It says to find out the like to comment on performance and position, right? So you should have at least two main headings, which says performance, and then you have a subheading, which is like position, right? So you should have proper subheadings, right, in small paragraphs. Don't use pointers. Don't use one big paragraph for writing an answer. Instead, write two, three sentence, small paragraphs, right? And 16 relevant points should be there, right? And I also require you to make sure you're using the ratios which you have calculated in section in the first requirement in a first requirement in your answer, right? Use ratios calculated in part A in writing theory of B, right? These are very important tips which you should remember for a ratio analysis, and make sure you are able to relate everything to the scenario, right? So let's check the solution for this. So we are calculating the GP margin. These are all typical FR ratios to be calculated, right? Operating profit, return on equity is we are supposed to calculate. Then net asset turnover, which is revenue divided by property, plant, equipment, debt divided by equity, payables payment period, receivables collection period, and inventory holding periods, right? So over here you can see there are 8 calculations, right? So this is for 4 marks. Okay. Moving on, if you see over here for this one, we have first heading, which is performance, right? and the second heading, which is position. So in two main headings, they have completely distributed the answer. Now, how can you write good ratio analysis answer? See, first is you do the ratio calculation, and second step is that you mention the movement, right? What's happening? Is the GP margin increasing or decreasing, right? And then second, you're supposed to try to find out the possible reasons why that's happening. And third, you can write the impact of it, right? So first, you have to mention the moment, try to analyze the moment, and then the impact of the moment, right? This should be a proper 2, 3 sentence answer for one ratio. This will help you to get 1 or 2 marks, right? Revenue is down by 18%, and make sure you're using the formula for the ratios which you have calculated. And another tip is that you can simply calculate the percentage increase or decrease also based on the exhibits that's given to you. Like for example, over here revenue has fallen by 18%, right? So you can do this stuff also. You can find out the percentage increase, decrease, and then mention in your paper. Right, gross profit has fallen by 58%. These are extra calculations which will definitely help you to score better. Right, profit is down by 106%, and there's a positive after tax profit of this much. Right, so this is all just numerical stuff. And then it says that decrease in cost of sales is less in proportion to reduction in revenue. This appears to be mainly due to impairment expense of the factory building. Now it says that the cost of sales has decreased. However, it is is less in proportion to the reduction of the revenue. It appears that there was some sort of impairment on the factory building, which has led to this scenario, right? So see how they're linking the calculation, the movement with the exhibit, that this is because impairment expense of the factory building, right? So you're supposed to link with the case. If you simply write down some memorized points, then that's not going to earn you any marks, right? There might have been a fixed production overhead, right? They're trying to guess. They have no idea, but they're trying to guess something, right? So you can also guess like this in your exam. As long as you can justify your point, you're going to earn a mark, right? High cost of raw material contributing to it, and decrease in marketing expense can be a reason for decline in revenue. Now, since a company is not spending much in marketing, it's possible that the customers have forgot about the product and there's a decline in the revenue, right? And may also decrease future potential revenue because of decreased visibility, right? So these are the points which you can put a bit of your mind and a bit of your focus, and you can write these points. Right. That this company had a several costs in 2006, employee redundancy cost, impairment has happened, loss in financial asset investment. And however, these are non-recurring costs, right? That means this cost will happen only this year. The company is incurring this cost only this year, and next year this cost won't occur again. So in this scenario, it's better that you can exclude this from the calculation, then you can assess the real performance of the company, right? So so if you ever come across any one-off item, like for example, loss on sale of asset, now you won't be selling the same asset every year, right? So this is a one-off item. So make sure that you can also subtract this one-off assets impact from the ratios, and then calculate the ratios again, and then highlight in your answer that without the one-off expense, one-off item, the ratio is performing better. And since this is a non-recurring item, it should be excluded from the calculation to assess the real performance of the company, right? So these are the things you can also write. Right. If the non-recurring costs are removed, then the results of the company are better. Like if you remove the one-off item, then the results are better. And you don't have to write this lengthy answer. You just need 16 small paragraphs, right? 16 main points which you need to write and explain properly. Decrease in marketing costs has also decreased the operating expenses. Right, these are the points you should definitely write in your paper. You notice what are the changes, and then you try to correlate them and then write it down in your paper. Right. And it also mentions about the redundancy, that since the company has done redundancy, they'll have to acquire. See, first of all, what happens is that the existing employees will be, asked to leave the company basically. So this will lead to the reputational damage, right? And they'll have a lack of skilled employees, which may compromise the quality of the product, right? And other things that they'll have to spend more in rehiring skilled employees to train the new employees. So this will again lead to more negative consequences in the future, right? And they have also stopped marketing and advertising, which will lead to more loss of sales and will lead to a decline in the market share. So these are the points you can write. Next, speaking about the position of the company and how the company is doing, like statement of financial position based on the SOFP. Right. So over here, the carrying amount of NCA has decreased because of the impairment. Right. And see how they have mentioned it. The carrying of the NCA has increased. Why has it increased? By impairment loss. And from how to where? Right. So all those things should be included in order for you to get a very nice mark. Right. The bank balance has been improved by 2.2 million. This has been helped by a successful right issue that raised 4 million. Right. And if you try to, analyze the movement of the retained earnings, it seems like the company has paid a dividend of 1.7 million, right? And that's basically 55% of the dividend per share paid in 2005. It may be unwise that the company is giving this much dividend when the company is also already having, a lot of issues in the performances, right? However, if they don't give this much dividend, then it's high likely that the shareholders might, not feel confident in the company anymore, and this might lead to investment losses, right? So you can write from the positive aspect and from the negative aspect, right? Like since they're giving higher dividend, the shareholders are happy with the company, like they are supporting the company more. So these items also can be written. Right. The increase in inventory holding period and the trade receivable collection period is also a very negative indicator because it means that the inventory is not being able to sell very quickly. It's a very slow moving inventory, and the company um, has to incur more holding costs. There's a risk of damage, and the company is dealing in the clothes industry, right? And these are highly, changing industries. So it's possible that the outfits get outdated and the company's inventory is, very stagnant. Right. And if the receivable collection period is quite high, then this means that the company has a huge risk of irrecoverable debts. Right. The customers are not able to pay back to the company on time, and basically the money of the company is stuck in the cycle itself. Right. So in this scenario, it's very needed that the company is able to do proper credit management, or else the company will be basically struggling to maintain the liquidity and survive in the long run, right? Then you can also mention about the payables. It's very long, and this can obviously create tension with the supplier. It will impact the supply relation in the future, right? And the gearing, see, the borrowing has decreased. The gearing ratio has also increased due to greater decrease in equity. Right, and equity has decreased due to operating losses. So these are the points which you can write for the solution 32 for the second case. Right. Now this for 16 marks, so 16 small paragraphs are enough. The examiner answer is too lengthy. You are not required to write this long answers in the exam. Just in proper common human language, just write the answer. See, first you write the moments of the ratio, then try linking the possible reason of why the moment has happened, and maybe the impact of the moment also can be written if you're able to match something, right? And then make sure you're using different headings, and then give a small conclusion paragraph, even if it's not mentioned anywhere, right? This will help you to, set a very nice impression in front of the examiner, right? That the company needs to improve the revenue and working capital management. If not, the company will struggle a lot to compete in the industry itself, right? So this was the debrief of um, FR pre-December 2025 mock exam. I hope all these videos were useful for you and you were able to learn something new, right? So make sure that you are practicing. Make sure that you keep revising the accounting standards. Go through the questions, ratio analysis. Make sure you go through the answer, and right, don't panic because of the length of the answer. Right, they are not expecting you to write such long answers. Just write as per the marks, right, and make sure you are sticking to the time limit, because if not, then you will lose the opportunity to earn marks somewhere else, right? So that's it from my side. This was Afshana Afrin, and I hope that you guys are able to pass this exam with flying colors. Right. All the very best. Thank you.